All right, topic A tonight. Fear of the unknown grips investors as the specter of deepening Japanese nuclear crisis grows. Battered across the board, across the world. Japan's Nikkei down almost 11%, opens in 1 hour. You'll see live Nikkei futures on the bottom of the screen. The Dow, meanwhile, dropped almost 300 points in early trading, but it staged a powerful late-day surge after a confident Federal Reserve voted to keep its QE2 pump priming in place. The Dow trimmed losses by over half and finished at 11,855. Japan and the Mideast oil shock has the Dow correction at just 4%. Really quite remarkable when you consider. On the other hand, Japan's stock market has fallen nearly 20%. Oil down almost 4% on the day. Gold off almost $30. The Japanese nuclear outcome is unknown. It is unknowable. The information is sparse. And that's why we've got the best and brightest market panel to try to give you some decent guidance. Let's get right to them. Here now from Singapore is Jim Rogers, chairman of Rogers Holding Company. I think he's still strapping in. We also have Dave Goldman. He's the former head of fixed income research at the Bank of America. And we have Gary Schilling, president of A. Gary Schilling and Company. It is good to see you. We will wait for my pal Jimmy Rogers. David Goldman, I want to ask, this is such a complicated and difficult subject because there are so many what-ifs. But let me start with this. Has the stock markets, at least the U.S. market and maybe the Nikkei in Japan, possibly discounted most of the catastrophe in Japan, or is that simply unknowable, David?
Larry, I think it's discounted the catastrophe twice over. I was buying Nikkei futures today. I think we're going to get at least a 5 to 10% bounce in the next week. In the extreme scenario, which you're getting out of Chatham House, of $1 trillion hit to the Japanese economy, that's 20% of 1 year's GDP. No way that justifies a 20% drop in the Nikkei. We don't have enough information, but we have to remember, at the end of the day, Japan is a country with no resources except for smart and productive people. Sadly, we're short 10 or 15,000 of those people. It's a terrible human tragedy, but I have to believe the Japanese are going to overcome nature. The Japanese economy is going to come back, so I am an aggressive buyer of the Japanese market here.
All right, that's very interesting, and that's a very brave call. Jimmy Rogers, I'm going to ask you the same question. Barring a complete nuclear disaster, and I understand that that is possible. Lord knows the radioactivity, there's one of the reactors gone, burning again, so this is so difficult. But, Jimmy, I want to ask you about this. We've seen some deflation now in gold and oil and other commodities. The entire Japanese event is contractionary and deflationary in economic terms. Is it possible, Jim, that the worst of this catastrophe is already discounted in the stock market, or is that just a silly notion and everyone should be in cash?
Silly notion by any stretch of the imagination. I'm not a very good trader, so I don't know. I'm an aggressive watcher, if you want to put it that way. You know, I've got my shorts, I've got my longs. One thing you have to correct, this is not deflationary. You now have governments printing even more money, and the Japanese are going to spend a lot of money rebuilding. They're going to be a buyer of things they have not been big buyers of. Copper, lead, anything to rebuild Japan. They weren't buying these things in a big way before. Now they're going to be aggressive buyers.
Jimmy, you're probably going to be right on that. You usually are. But I just want to say, we've seen a pretty fair downdraft in gold, in oil, in silver, in commodity indexes. And I guess what I'm asking you is, how long will that commodity downdraft continue?
That will not last much longer. With oil, for instance, Larry, you had the largest speculative long position ever by hedge funds and traders. Of course, oil is going to go down when you have everybody speculating on one side. But remember, all the nuclear power plants in the world are under suspicion now, and you're going to have a huge increase in the demand for oil and natural gas to run power plants because all the nuclear power plants are suspicious.
Gary Schilling, welcome back to the program, my friend. And I want to ask you, do you believe, in your economic judgment, that this catastrophe in Japan can bring down the U.S. economy? When I say bring down the U.S. economy, I mean something like a double-dip recession, all growth off the board.
No, I don't think so. Japan is largely a insular economy. I think it does have big effects on Japan. And in my new book called The Age of Deleveraging, which you're aware of, I talk about Japan being a slow-motion train wreck. And by that, I think that they are going to run out of ability to finance their huge government debts and deficits internally because they are relying on a high trade surplus and current account surplus, which I think are going to go away as U.S. consumers retrench more and more. This speeds that up because their exports are going to drop off now with the drop-off of electric power throughout the country and the disabling of the facilities near the crisis, and their imports are going to increase. Energy increases, coal and so on to replace nuclear and building materials. So when they get a negative current account balance, then they're going to have to import capital. They've been exporting capital for years, and then they're going to have to pay up for it. And that's going to be tough on the government because they're paying only 1.2% for 10-year Treasury bonds.
Gary, I want to ask you just quickly, if I could.
Sure.
Are you doubting that the Japanese can mount a recovery? I mean, it's being estimated variously, and I know this is off-the-wall stuff. Okay, $200 billion worth of recovery and reconstruction will be necessary. Do you doubt that can occur?
No. As I say, I think it's a matter of years. It isn't instantly, but as I say, the main effect to me is it's going to shatter what has been their protection from the rest of the world financially because they've been exporting capital. I think they're going to have to import it now, and that's very different in terms of financing their huge government. Even on a net basis, their government deficit is over 100% of GDP, and they're paying virtually nothing to do it. But the whole thing can grow on itself because higher costs means bigger deficits, means more debt. I think that's the ultimate issue.
David Goldman, the Federal Reserve boosted the U.S. market, which came back, almost 50% off the floor today. They said the recovery here in the States is picking up steam. Now, I don't know if they've discounted Japan, and I don't know if they've discounted the rise in gasoline prices that occurred in late February and early March, but the Fed is optimistic about the economy and does not see any more deflationary pressures. Now, they're going to continue their QE2 pump priming, David. But what is your take on the Fed? Why did the market rally so much when the Fed statement came out?
I think the market was looking for an excuse to rally. It was way overdone. The corporate profit picture remains very solid, Larry. I still think the U.S. economy, given the absence of entrepreneurship and startups and real employment growth, as we saw last week, the U.S. economy is a weak and lopsided recovery at the moment. But there's no reason not to be in stocks, and I see this as a selective buying opportunity in the U.S. and a screaming buying opportunity in Japan. I agree with Gary. Japan has long-term problems which are intractable. They have a shrinking workforce. They have an aging population. But these are things which pay off in a 25-year horizon, and the reconstruction issue is a 4 to 5 year horizon. I expect that in the worst case, the Bank of Japan will, as Hong Kong and others have done, will intervene and buy equities and bring the stock market back in the short term if the market doesn't do so on its own. That would be my Bank of Japan quote.
Larry, one of the interesting things, though, is what's happening to commodities, even oil. And as you know, I'm of the opinion that commodities are on the way down, and I'm short copper, full disclosure. But I rather suspect I was looking for it with a hard landing in China, but maybe it's already starting. And the fact that oil has been headed down, when, as Jimmy pointed out, they're going to import a lot of energy in Japan now, that's an ominous sign.
Jimmy Rogers, I'm going to give you the last word, my friend. What is your current investment strategy? Give us some investment tips.
I'm short emerging markets. I'm short the NASDAQ in the U.S. I'm long commodities, and I'm long currencies, especially the Japanese yen. I'm waiting to short United States government bonds, and I cannot believe you said the Fed could ever be right. Have they ever been right about anything, Larry? Why do you pay attention to them?
No, I said you're always right. I would never think the Fed is right. By the way, Jimmy Rogers, import prices, this may be a small piece of today's puzzle, given the nuclear issues over in Japan. But import prices coming into the U.S. now up 6.9% over the past 12 months from the weak dollar and the commodity boom, Jimmy Rogers. What do you make of that? Does that put the Fed in a pickle? They're going to keep pumping, but import prices and commodities are keep rising. If you guys are right and Japan doesn't melt down, Jimmy Rogers, I'll give you the last word on that. What's our central bank to do? What does this mean?
There is inflation in the world. Most central banks know it and acknowledge it. It's only the American and the UK central bank which deny it. They're making inflation worse. We've got a serious problem facing us, Larry. Be prepared.
But there's deflation, David Goldman, coming out of Japan, is there not?
This is a temporary shock, Larry. It's going to be overcome. I agree with Jim Rogers. I personally am holding a great deal of commodity positions in the stock market, though I've taken off more speculative positions for the short term.
I got to get out.
Larry,
Larry,
I'm still voting for deflation.
All right, I got two inflationists, one deflationist, and none of you think Japan is going to collapse totally. It's a very interesting segment. Gentlemen, thank you very much. Jim Rogers,
Larry.
David Goldman, and Gary Schilling.